Good relationship management brings about customer satisfaction, loyalty, and ensures long term partnerships. We at Union Bank have recognized the importance of this, and we continue to focus on capacity building of our relationship managers and upskilling them.
So what does the Treasury do? We aid the business by way of providing secure and long-term funding and also providing risk mitigation measures for our clientele. Union Bank, we have products within forward exchange, and we could advise them on which way the interest rates are going, which way the exchange rates are going. So it's more of a advisory role that we will start to play.
In many ways, I would say that 2024 was a year of consolidation. 2025 is expected to be a year of economic growth, which will be felt across most industry segments in the country. Stemming from this is the intense competition that will come among the banks to support most of this growth in these sectors. So with that, there stems a competition to get a larger share of the wallet share of these clients. Apart from that, AI, digitalization, etc., also will play a pivotal role in this year. Our corporate banking team is fully geared to cater to this economic growth. We have identified the segments we want to partner with, and all efforts will be made to penetrate the segment and work with those clients. Union Bank also has our digital platform, which is the BizDirect platform, which we will harness and work with our clients to enhance their efficiencies and reduce their costs. Apart from that, we have our ESG practices under our ESG agenda, which we have implemented, which will also complement the ESG initiatives of our corporates. Once again, this will create sustainable relationships and long-term value among corporates. Apart from that, we also have our treasury and trade teams who are well attuned to what is happening in the industry and evolving needs of our clients who they can go out and cater. Relationship management is the final value creation in partnerships with corporates. Good relationship management brings about customer satisfaction, loyalty, and ensures long term partnerships. We at Union Bank have recognized the importance of this, and we continue to focus on capacity building of our relationship managers and upskilling them with industry trends on digitalization, AI, and other aspects to keep them abreast and attuned to the market trends and deliver to customer expectations to ensure long-term partnerships.
If I were to break it down between 2023, 2024, and 2025, I'd say period of calamity, stability, and resurgence. So we're in takeoff mode in 2025. All the economic indicators that were flashing red, then amber, and now it's green. So if you look at GDP growth, if you look at foreign reserves that central bank as well as the banking sector holds, and then if you look at foreign currency liquidity as well as rupee liquidity, it's all, it ticks all the boxes this year. We made it through the hard times, and now it's time for takeoff. So the banks during the last couple of years, they were making, their bottom lines were actually supplemented by higher interest rates on the government securities. Why that was because the government securities were risk prone. We did not know whether the government would pay it back, would they default or not, would their debt restructure. Well, all those questions have been answered, and it's all done and dusted, especially on the foreign debt treatment as well. So we have passed all of that, and we know exactly where we are at, what we have to pay, what we do not have to pay. So the risk factor has been taken out from all of those securities. And we are seeing the interest rates come down, especially on the inflation front as well, where the inflation has come down in a big way. So all of this point towards growth. So GDP growth is always oiled or greased by bank lending. So it will be a shift this year where most of the income is coming from the Treasury towards the core business lines, especially be it corporate banking, retail banking, SME. So that is where the most of the banks will move the liquidity out and freeze it out of the treasury's hold and deploy it in these sectors. So that is where you'll see the growth. So that means it's the man on the street would be benefiting, which means due to the lower inflation as well as higher spending power because of the lower credit rates, lower interest rates, and the credit that will be flowing in, you will see consumption picking up and also growth happen in the country. So that's what 2025 is all about in short. The Treasury was sort of a one-trick pony during the last couple of years, where the Treasury was where the money was being made in most of the banks and most of the corporates as well, in corporate treasuries, because of the high interest rates and also because of highly volatile exchange rates. So the margins very high. Banks were making very high margin. Of course, if you ask me, were they being Shylocks? No, they weren't. What actually happened was the higher the risk, the higher the reward. So it was uncertain on which way the inflows would come in, especially on the foreign currency side when there were no inflows whatsoever. So then you had to keep a higher margin because of the higher risk. But now all of that is behind us. So it's back to business as usual, high volumes, lower margins. The business is being carefully moved out of the Treasury's game plan, and it's moving towards general banking. So that's where we are at. So what does the Treasury do in the midst of all these changes? Because we were sort of running the show a couple of years ago. Well, we aid the business by way of providing securing long-term funding, and also by way of risk mitigation, providing risk mitigation measures for our clientele. So what they are, if you ask me, we would, because as I said before, we would see a bit of volatility on the FX side, exchange rate side, but albeit I think for a short term. But even then we have solutions with us, especially Union Bank and most of the banks. I think that treasuries, we provide risk mitigation solutions where we could hedge the risk, especially we have products within, like say, forward exchange, and we could advise them on which way the interest rates are going, which way the exchange rates are going. So it's more of a advisory role that we will start to play and be of assistance towards our clients, and also help out other business lines and give them direction on which way these are going. So the treasuries would be, taking more of a back seat and helping other business lines to do whatever it is that they do best by providing liquidity, and also in an advisory capacity of projecting the direction that the economy takes. We have an able and eager team, and they're well trained. We've got the best in the market. So it's always the manpower that we boast about, especially at Union Bank. So we have a full team now, and everybody's eager to get in on the action. And most of them have been exposed to various markets, especially investment banking, be it treasury, be it corporate banking, and they've come from various places, and they make up the core of what we offer.